So hello guys, it's Max here from the Investing Hub. Today I thought it'd be a great opportunity to do a video teaching you guys the free indicators that I use on a daily basis. This is by far one of the most common questions that we get here at the Investing Hub, is people sending us messages either via Instagram, Facebook or YouTube asking us what indicators should we use to analyze the markets on a daily basis. So indicators are a great tool to use to predict future price movements in charts by analyzing data from the past. It's very important to understand that all indicators are laggers, meaning that they take data from the past and try and predict future movements, and they're not always correct. But what we're going to do now is jump onto my computer and I'm going to show you the free indicators that I use, as well as many hedge funds and big fund managers on Wall Street. So for the purpose of this video, I'm using TradingView. This is a software that I use day in, day out to analyze technically my charts. In front of us, we have the NASDAQ 100. The NASDAQ 100 is an indice which follows the 100 biggest US tech stocks. So to start off with, we're going to use one of the most simple indicators to understand. It's one of my favorites actually. It's called the RSI. So to access this indicator, all you have to do is go to the top left of your screens and click on indicators. Once you click here, a window will appear where you have to then type down RSI. And RSI stands for Relative Strength Index. Once you click here, this will appear at the bottom of your screen, which is this purple channel. And I'm just going to quickly drag this a little bit bigger whilst I explain what the RSI is. Now, the RSI is an indicator used to predict whether an asset is overbought or oversold. Now, typically speaking, when an asset becomes overbought, it's very likely to witness some selling pressure, meaning that the asset is likely to fall down in the coming trading sessions, and vice versa. When an asset is then oversold, you're expected to see some buying pressure. So this is a great indicator used by some of the top traders in the world still to this day, where they use it to their benefit to analyze charts and assets to determine whether it's a good time to enter or exit any particular trading position. So the RSI has a purple channel, as you can see on your screens. It goes all the way up to 70 and down to 30. When this line on this channel dips below 30, that then indicates that that particular asset is now oversold. And then when this line pops above 70, that's then telling us that that particular asset is overbought, meaning that it could potentially be a good time to sell. So a great example, if we just look at the NASDAQ 100 as of recent, we've had this very explosive move higher. And as you can see on the RSI, we went as high as 72, and on the NASDAQ 100 we did achieve prices of 12,830, and then many investors would have used the RSI to their advantage to then take profits in this asset, and that would have been a good time to do so, because what happened afterwards is that we actually had a significant decline in the NASDAQ 100 of around 7%, and that allowed the RSI to cool off significantly. A great example again is back in August 2022, we had the RSI which dipped above 70, and again that would have been an opportunity for many investors to look at the RSI and to perhaps decide to take profits, as it went up very, very far in a very short period of time. And then what happened afterwards? Well, the RSI actually dipped all the way to oversold territory, and we saw the asset decline significantly. In fact, the asset from its highs decreased 22.5% in a very short period of time. And that RSI then went below 30, which then indicates it's a good opportunity to buy. So if you would have bought there and traded it up until the RSI went back above 70, well, then that would have been a fantastic buying trade where you would have gained approximately 17% towards the upside. So this is an indicator that many investors use to determine whether that asset is overbought or oversold. So moving on to the second indicator that I like to use frequently, and that is moving averages. This is a very good indicator that you can use, which will help you with buying and selling particular assets. So if we go and type down moving averages here on the indicator tab, so moving averages, and this is what we're looking for, the 50 and the 200-day moving average. This is what I like to use. I do actually like to change the colors, so if you prefer it to be a different color, you can do so. So I like to have my 200-day as a blue line, and then my 50-day as a red line, and then I like to make the lines a bit thicker as well, which you can do so at the bottom of your screens. And then this basically shows you two lines that have appeared along with the price of the asset that you are analyzing. So for example here, the moving averages, they form these crossovers where the 50-day EMA, which is the red line, pierces below or above the blue line on your screens, which is a 200-day EMA. So a great example is here. We form something called a death cross, otherwise known as a bearish crossover. This is typically a good selling opportunity in the market. And then occasionally we do actually form something called a bullish crossover, where the 50-day EMA pierces above the 200-day EMA. This is typically a bullish sign, meaning that you should buy that asset. So if you would have bought up here and held on all the way until we formed the next bearish crossover, well, you would have made a significant amount of money. You'd have made roughly around 61%. So again, the 50 and the 200-day moving averages are great indicators to use whether to know when to buy or sell any particular asset. And then last but not least, moving on to the third indicator that I use almost every single day when day trading, it's called the MACD line. So again, we just click on indicators, the top left of our screen, and then we just type down MACD, and this is it, moving average convergence divergence. That's what it stands for. And that will bring up this tab at the bottom of your screens. And I know it may look a little bit confusing, but it's actually very simple to understand. On the MACD, you have a 0, which is the baseline. So if we go in the settings here, you have something called a MACD line and a signal line. Now, if you have both the MACD and the signal line cross above 0, which is the baseline, that typically tells you that that asset is now in a new uptrend. And then vice versa, when the MACD and the signal line cross below the baseline, that then typically tells you that that asset is then in a downtrend. So this is a great indicator that I use on a daily basis to understand whether a particular asset that I'm trading is in a new uptrend or a new downtrend. So for example, recently we had the Nasdaq 100, we see both the MACD and the signal line cross above 0, which indicated that we were in a new uptrend. That was actually very early on in this recent uptrend that we had. So that was a fantastic buying signal. And if you would have bought the Nasdaq 100 there, then there was a potential 12% gain after that signal then occurred. And right now, as you can see, the signal and the MACD line are fastly approaching that 0 baseline, which could potentially indicate that we're about to enter into a new downtrend. So I'll be keeping a very close eye. I hope that you've enjoyed today's video. Again, these are just 3 very simple and easy indicators that I use on a daily basis. If you're someone who's new to trading, you could learn and adapt these indicators to your trading strategies and your technical charts very easily. If you liked today's video, then please subscribe to our YouTube channel.